Hi everyone, today we'll talk about 3 UK stocks to buy, and this is my most second popular video on the channel that I do behind my US free stocks to buy. So I'm going to be talking to you guys today about the 3 stocks I'm going to be buying this month. There is potential for me to buy a couple more stocks than just these 3, depending on where the stock market goes and if it goes down. There's quite a few I'm considering, and on the Discord group, which is in the link below, and on the Patrons page, I've been posting like potential stocks that I'm looking at and certain prices if the stock market does drop. And I might be buying them as well, but these are 3 definite ones that I will have bought by the time this video has gone up, and I'll talk you through these 3 companies today. So number 1, I'll get this one out of the way because you guys know this is going to be on this list, and I've had a few of you guys message me about this, is Greggs. And I know a few of you guys said, right, is it time to go buy? And I've been holding off buying Greggs, but now it's kind of got to the prices where I'll just add a little bit more to the position that I do have. The ticker symbol for this one is GRG. And you guys knew that this were going to be featured. I mean, I love Greggs. I mean, I love the food and I love the stock. So it's a perfect combination. Now, the price has dropped on this one, and I'll be honest, I don't really know why, because the stores have opened, and from what I've seen, they've been pretty busy really, like steady away, and I think this company will do really well going forward in the future. The company itself is working on its own supply chain, which will mean the profit margins grow on this one, which in the future means it'll have a lot more cash on the balance sheet. Potential to maybe even pay a dividend, just better profit margins in general. So that's a great thing. It's offering delivery, which is something you didn't have previously, and also the vegan menu seems to be a really big success. So it's looking at branching out into other areas. So I think this company is positioned to do really well. It's currently 29% undervalued on Simple Wall Street. I could potentially argue that it's a little bit more undervalued than this. I think it could be maybe even 40 to 50%. But I think this is a company that I'd like to hold for 2 to 3 years because I think it does fantastic. The PE ratio is 19, and for a company that has such a clean balance sheet and the growth potential that this company has, for a PE of 19, that's fairly cheap, to be honest with you. Like, this company for me should be a company that's maybe trading towards a 30 PE, maybe a little bit lower. So this company has a really cheap PE for what it does come with. So it does offer great growth potential, earnings wise and also revenue wise. You look at the past performance, 2019 was a fantastic year, but previously as well, the growth's been fantastic on this company. And like I say, you're talking about a company that has a clean balance sheet. There's no debt on there. It has 91 million in cash, so it's easy for this company to actually just, if it needs money, it just pays off for it. So even if it had to go down to lockdown again, it's got a lot of cash to burn through there. That cash is only going to go up when it opens back up. And I think it's a company that will be able to pay that dividend pretty quick because of how clean that balance sheet is. So I'm a big fan of companies with clean balance sheets that offer growth, which this company has. We've got insiders buying, which includes the CEO, which is Roger Whiteside. Obviously, I'm a big fan. I think the CEO, and I think maybe the CFO might have been buying shares. I'm not 100% sure right now of actually recording the video, but I knew Roger Whiteside, who is the CEO, he bought some shares, which is absolutely fantastic. Overall, Greggs for me, it's just an amazing company, amazing brand. It's got fantastic growth, a clean balance sheet, and also you'll pick that dividend up. So for me, it is my biggest position in my UK portfolio, and for me, it's the best company on the stock market right now. Number 2 is a new position that I'm going to start buying, and this company is Rightmove, which is RMV. I featured this one a few weeks ago, and I've decided I'm actually going to take a punt on it now. And the reason why is that I think this company is still in a pretty good position. Obviously, there's a lot of worry about the housing market going down, but I'll be honest, I told this story a little bit ago, but basically my girlfriend, she got a notice on her flat and she had to get a new flat, and she was basically using Rightmove all the time. And when she was trying to, and this was in the peak of the COVID-19 lockdown, she was trying to view flats, and literally a flat was going up and there was 14 people viewing that flat on the same day, and they were literally going off the market without people viewing them, and it was insane. I was like, no way is this happening in the peak of COVID-19, but there was clearly a demand still there. So I feel like they're going to do really well, and going forward they do really well. I've seen a few people in the Discord group posting the traffic to the website still being pretty strong and starting to recover as well. It's a company that owns 80% of the market, which is fantastic, the number 1 brand in this area, and I just think it's a company here to stay. I think it's just such a good platform where you can view so many properties and see which one you like in certain areas. It's all these kind of estate agents in one, and I think it's just a product that will dominate the market for many years, and I think they'll even build like other income streams off Rightmove itself. The company's still on a little bit of a discount. It's sold off about 20%. It does say on Simple Wall Street it is 80% overvalued, but as I always say, I think Simple Wall Street really struggles to keep the price targets with like growth stocks, which this kind of is. It really doesn't price them right, and you get a lot of growth stocks that are always said to be overvalued, so just bear that in mind. The PE ratio is 27, but for a company like this, that's a pretty fair PE. It should maybe even be a little bit higher than this, so the PE is totally fine in my opinion. It's got great growth. You look at the past growth, it's absolutely insane, and obviously future growth is going to be fantastic as well. It's going to be growing at high single digits. It's a company that obviously is online, which lets it have amazing profit margins. So it's got a 60% profit margin as of this year, which is fantastic. Because of this profit margin and how well the company does, it's got a clean balance sheet. There's zero debt on there. It has a nice healthy 36 million cash, which is absolutely fantastic. I would like to see some insiders buying, which isn't happening, but I'm willing to put a bit of money in this company because I think it's a company that will just do really well. It's never going to be my biggest position, but at the same time, I think it's a fantastic company with growth and a clean balance sheet. And number 3, I am going to be adding into Dark Group, and they're better known as Jet2. I've had a few people ask me what I think about my Dark Group position, what I'm going to do with it, and it's kind of got to the point now where I'm like, I think this could be the last opportunity to be adding in at these sort of prices. So I'm going to take that opportunity just to extend my position, maybe make it about a 10% bigger than what it is right now. I'm not buying huge, but I'm going to buy a bit. Now, the reason why I don't think it'll be down as much as what it is right now for much longer is because the restrictions of the quarantine when you go to other countries are kind of getting removed. I think the restrictions are getting moved in like a week's time, so you don't have to quarantine when you go to like France and Spain. I've already heard people saying like, oh, we're looking for like a last minute holiday now. So I think like bookings are just going to go absolutely insane, because from what I can hear, people are desperate to get that summer holiday in. I've said it before, I think that people, as soon as these restrictions go, there's just going to be a surge of bookings, and I think Dark Group will really benefit from them. And obviously it's still massively sold off, like it's sold off 60%. I think these prices are still really cheap for this company. So it's still at one of the cheapest valuations, I think, really, for like what you get with this company on the stock market. Simple Wall Street does have it as nearly fair value, really. I would have to say that, once again, I think this used to be massively overvalued, and I think they've slightly updated it now because of it being a growth company. Like I say, for me, in my opinion, this stock is massively undervalued. I reckon this stock has the potential to go up 100% from here in 2 years' time. It trades at a PE of 7, which is extremely cheap. That, like I say, it's getting kind of towards like bankruptcy PEs, which is stupid. Growth wise, it's had a previous massive growth. You can see it here. When you look at the future of it, it's a bit, I think Simple Wall Street have this wrong. I think the forecast for the growth is going to be fantastic. The balance sheet, it's got a healthy amount of cash, 1.7 billion. The debt is 980 million, so it's got double cash to debt. And for me, when I look into Jet2, I use it personally, and I think like you never see an empty Jet2 plane. The branding's fantastic, even though the adverts are annoying. They're actually really good adverts. I think the customer service is fantastic. The prices are great. For what you get for your price in that package holiday is absolutely amazing. It's, for the kind of companies that are in its industry, something like a Ryanair, it knocks Ryanair out of the park for me. It is a great company. Like I say, I think as a customer, it's going to do really well. It's in a good position, like healthy wise, with its cash. The growth's going to be fantastic. I think it'll order more planes. It will go to more destinations, and it's a company that will only benefit. I know it's, you don't want anyone to lose a job. You don't want companies to go bankrupt. But when you see like Thomas Cook going out of business, you see, companies like Virgin struggling, and this company, I think, is, if they are going to struggle, if they are going to obviously go bankrupt, all it's going to do is give this company more customers, so it'll benefit from that. Just overall, a great company in my opinion, with cash, the growth, how it's well doing, its interaction with its customers and how loyal they are. Like, I don't think airlines are, that loyal, but this company, has a little bit of loyalty as well. And when you look at a lot of airlines, like your Delta, Southwest, a lot of them companies struggle to grow profit, and this company is a company that's growing that profit year over year, which is a great sign as well. So Dark Group, or Jet2, is my third stock of this list, and I hope you enjoyed the video. Let me know what you're buying in July. As always, smash that like button, subscribe, and I'll see you in the next video.